All right, good evening, investors. Welcome to our class. You should be able to see a screen, I do believe. Let me get rid of some of this stuff here that I'm not going to use so I can see you guys. Ooh, 1 second. All right, I guess that's good enough. Hey, it doesn't stretch. Anyways, let's dive right into it. If you can see the screen, we are good to go. Yes, you can. Hey, thanks for your emails and stuff, by the way. I know I asked the other day if you guys had any objections to maybe a bi-weekly email, if that's something you guys might prefer or like in addition. And a lot of good feedback. Everybody seemed to like it. So hopefully we can get started on that real soon and get some emails coming out to you guys. I know not everybody can make it, this time of night, or some people on the other side of the world, time of the morning. It's a little early, or you got to go to work. So we're thinking we're going to do a, like I said, the bi-weekly email, so that you really don't have to check in unless you have a question. If you want to come in and ask a question, or you just want to see the review, or happen to be around. Otherwise, what we'll do is we'll always have a video, which would just be this class recorded. And it will probably be a little bit shorter, and then we'll have that email. It'll just get right down to it. Here's what happened today. Here's the potential plays that we're looking at, and then it'll maybe visit the blog if you want to see the charts, so that those of you that want to kind of take a more of a passive approach can at least see the potential plays, put your orders in, and that works for you guys as well. Does that sound good? I think it's great. Yeah, good. Wonderful. I'm going to put this over here. Okay, so let's take a look at the market here on the spiders. Yesterday, kind of a nasty day, right? You remember going back earlier this year? I'm going to try to highlight it here for you so you guys can see. Remember this day right here? This one sort of pretty bad day. It was bigger volume than normal. We were talking about the symbols that were on our portfolio. It became very clear which symbols were a little weaker than the rest of them, because on one day, and only one day, we were able to see those symbols sell off, while the other ones either held in place or even rallied a bit or went higher. So what we had is basically a similar day right here, and that happens when you get near market tops. There's, it's part of the game. So we're able to see very quickly some of our symbols we just shouldn't be wasting our time with, and they either sold off, hit our stop prices. We either took you can see the portfolio here. We either got stopped out for a profit, stopped out for a loss. There was no break-evens, right? No break-evens, but we're able to see that, like we talked about, FBHS, maybe we were done for the ride on that one. BCPC, we actually jumped up to hit our target, so that one didn't stop out. And then our gold miners hit their stops, right, as gold just got crushed, unbelievably crushed. And so we're able to see which symbols now we want to stick with. So we were able to weed out a few of them there, some for profit, some for a little loss. The only full stop for me was this AEM. Didn't get a chance to raise it. Otherwise, the rest of these now really are starting to become obvious, strong stocks. And I'll tell you what happens, or usually what happens from here is these symbols get the attention. We're not the only ones to recognize things like the retail space. You see that today? Everybody's talking about Macy's. It was a good day for Macy's. And then all of the other retail stocks followed along. So we can, just because we're in them, yeah, we can tell. Obviously, you can see your P&L going up, and that's fine. But other people will recognize this too, and it just helps drive more volume over to that sector. Yesterday, the big talk was, the defensive stocks, right? The can't think of the United Technologies, right? They make a lot of stuff for, helicopters, right? They own Sikorsky, and they make bombs and all that great stuff. So a good day for them. Boeing, right? Today was a good day for them as well. And so you see all these symbols start to perk up in an otherwise market where yesterday a lot of them were really selling off. So While we lost a few of them there for profits and losses, some of these look pretty good, given that they were able to hold up. And for some reason, I didn't look into this one today, but WY came back strong. Usually you don't see that. Yesterday was a pretty negative day, lots of volume, and today it came back pretty strong. I'm not sure if that was just temporary rebound or what, but I'm not sure if there's any news on that. But WY had a good rebound day as well. So the exciting thing, I would say, going forward is on some of our retail stocks being able to raise our stops, right, to reduce the risk, however you want to say it. So if you look at something like Macy's, this was the better mover of the day. Our stop, we raised it this week to only risk 4%. Well, that 4% stop loss is at $40.32. So if I put that on a chart, that's about right here, right? And you can see Macy's is way up here. So by the time we get to Monday, 2 market days from now, we should be able to raise that stop up more towards like 2% or a 1% risk. And hopefully at the same time hit our first target up here around 45. And so that's pretty cool that we get things like that. That other one, we know about Target. Here's one that I really didn't expect a lot out of. Target doesn't really make a lot of money. And sometimes, people get picky on that. The big guys don't want to put their money into companies that aren't making a lot, but Target's been slow and steady, so I don't mind seeing it do that. And that's kind of the same scenario. Going forward, we're going to look to reduce risk even more. We got a guaranteed profit on Target, but again, our stop is at 64. And so if we go back over to our chart here, that's all the way down here. So another good day or two out of Target, and we'll be able to raise that going into next week. And so when we get into doing the that bi-weekly email, hopefully I can start next week. I'm going to be doing those videos first thing in the morning, or first thing Monday morning. We'll just review the stops real quick. So then when we get into these classes, we don't have to talk so much about the stops, that we've already referenced that, and we can move on to the symbols we want to play and the strategies and any education or questions you have. Now, if you have had a chance to take a look at the members page, we have our spreadsheet posted on there. We have the FAF from the other day, which is also posted right down here. Nothing's happened with that one yet. We haven't hit that 25.85. So what I want to do is, well, obviously give you the heads up. If you want to play along on FAF, we're looking for 25.85. And if you want to see the chart, that's on the members page, just to see it visually. You can do that as well. The next one that we want to look at is SKS. And this one had a little bit better of a day than I was hoping today. But that's, it's fine. It's a retail stock, so naturally it played along with Target and Macy's and stuff. But let's take a look. SKS, here we go. All right, so what we were looking for is one of the ways that we play, or we'll take an entry on a play, is very simple, and it's very common. Lots of people do this, is to buy a stock after it comes out of the pullback. And while that sounds simple, right? So, buy a stock once it comes out of a pullback. How do you define that? What's the specific entry? And so the easiest thing to do, and this sounds elementary, you might think this is pretty goofy, but a lot of people do this, and this is one of the easiest things to do, is let it pull back, right? We're very big on our 50-day moving average. We can see it came down into that nicely. And then rather than just guess that it's going to bounce, you know me, I like to always see other people buy it first. I don't need to be the first guy in. I want to see other people jump in too. That way, if I'm wrong, we're all wrong. I feel better about that. So one of the ways you can do that is people will draw a trend line. This is called a trend line, where you just draw right over the tops of this downtrend. I know some of you, this is just review. And then once the stock moves up and above that trend line, then you can buy it, right? And so today you saw that. A lot of people played this same play. You can see the volume down here, much bigger than other days. And so people had that same idea in mind, and usually you get a nice strong day out of that. So I was hoping it would have another quiet day so we could post a chart and put 1150 as an entry, but it chose to have a good strong day. Now, it's pretty obvious that other people have already jumped into the stock, right? Very green, nice, solid bar. So we want to jump in as well. Now we're saying, All right, we're comfortable with that. We're willing to put a little risk on and see what happens. So I put the entry price at 11.65 just because that was the closing price here, and we're already past the point that I would like to have gotten in. But if you're here in the class or you're watching this video now, you could probably do a little better than 11.65, and I'll go over this real quick. Those of you that are day traders or you're in the day trading room, here's a different chart. And we usually don't look at it here in the investors group, but day traders should live and die by this. And this is one of my favorite charts to use for day trading. And it's just a 60-minute chart, meaning each candle that you see here is 1 hour's worth of trading. So really, we look at weekly and daily. This is breaking it down by the hour. So it's a much lower time frame. And one of the things that you get to know when you're day trading is this green line that you see here. Again, this is going to sound really simple and kind of, elementary as well, but stick with me. So this green line right here is the 20 period moving average. So you couldn't say 20-day, right? It's the 20 period moving average. And it just means that this line represents the average of the last 20 closing prices. So, you don't have to know that if you don't want to, but if you were to count back 20 bars and you were to add up the closing price of each of the last 20 bars and divide that by 20, the average price would be right here, somewhere around 11.43, 11.44. Well, in day trading, it is a known fact that the price cannot get too far away from this 20 moving average. And we've discussed this many times on the daily chart, where if you were to give me $1 million and say, Dustin, go invest this for me, do what you got to do, just make me some money, and I came back to you and I said that I constantly bought it well above the average of the last 20 bars, or I paid the highest price that the last 20 bars worth of people paid, you wouldn't be too happy. That's kind of a retail price. You'd say, well, why don't you buy it closer to the average? You seem to pay more than the average trader, and that doesn't make sense. And that's what happens. When a stock gets too far away, the big money, hedge funds and everybody, they have to back off for a minute. Now, since this is an hourly chart, a 60-minute chart, they're only backing off for a couple hours, right? So it's not very long, but they have to back off those orders. And so you always see it go like this. The volume goes up, and when it gets too far away from this line, see how we're way up here? The volume will go back down for a little bit, and it doesn't mean that the stock has to sell off, although a lot of times it does pull back, but it just means that the stock's going to sit there and wait for this to catch up little by little. So hour after hour, this will go like this. Now, if the stock drops towards it, then they'll meet somewhere in the middle, and you always see it, same thing. Once you get closer to it, the volume will pick up again. And you have the people that will try, like let's say it goes up first thing in the morning, there'll be a little more volume, and those are the people trying to push it. They're trying to short. They know it's going to pull back. They'll try to get in and push it down. And then you have a handful of people that just don't know any better, and they buy it up there. But every time you get closer to this 20 moving average, you see the volume increase. Whether it's people betting on it going up or down or whatever they're going to do, that's where they can make their decision. The real people that have lots of money. So to make this long story a little bit shorter, the point I was getting at was, if you're around, and you want to play around with this stock, especially since tomorrow morning we have the jobs numbers coming out. I don't know. I don't ever try to guess what they're going to be, but if we sell off first thing, chances are you could pick this up 10, 15 cents cheaper. Now, if you got to go to work, you're like, come on, I don't have time for this. It's only 10 or 15 cents, right? You just put your order in, right, and wait for it to get filled. If it doesn't get filled right away, some point through the day it will. All right, so I'm just saying, if you're around, right, you might be able to pick it up cheaper. However, I will track it from the 11.65, pretty much the opening price tomorrow, unless it gaps way up. If it does gap up into the 11.80, somewhere in there, don't buy it. Don't fall. It'll sell off. If you're a day trader, you can short it. But that's what I mean by that. Okay. So if you're around, you can try it. If not, you can put your orders in now, and no big deal, right? It's only 15 cents. Okay. Now, this symbol, just like WY, not usually the most exciting symbol to trade. So don't imagine that this will be a few day trade and you go, yay, all right, I made some money, I'm gone. This is like WY. Usually doesn't do a whole lot. Very slow and just kind of plugs along, which is natural. It's a $11 stock. Okay. So we'll go with that. Again, the chart is posted on the page. If you want to see the targets and stuff and see if that's something you're interested in, you can see that there. And then remember FAF, just a simple breakout play, which is, I would say, fairly aggressive given where we're at here with the market. Anything's possible. But I think having that 25.85 as a entry price, we'll have to see some more, up move in the market to push FAF up and over the top. If tomorrow the jobs numbers are bad and the market opens up down, I highly doubt this will open up higher and we'll get sucked into it and then get stopped out. So 25.85 on FAF, and it's just a simple, straightforward breakout strategy on a stock now. This is the key thing, on a stock that they make money. So it's a much different than something like a Target as far as that's concerned. Now, also, just a simple heads up, and then I'll let you run. If you have any questions, feel anytime, it's good. You've noticed that this earnings box over here has been fairly empty. Starting next week, right? Let's do this together. I'll show you how to find it. So we're going into what's called earnings season, or the end of the quarter. The first quarter is over, and the companies are all going to start reporting how they did, right? And it just basically makes for a nice and volatile market usually. Fun to day trade if you're a day trader, and as an investor, you want to know the date that your stock has earnings on it, right? So a lot of these are going to start coming up, and what you do is, if you ever wonder, hey, is it earnings season, or I don't know, when's the next one coming up? Here's how you do it. I'll just use this here. What you do is you go into your platform and type in the symbol AA and hit enter. AA is always the first stock to report their earnings. They go, naturally, it's the symbol AA. They're at the beginning. So on the thing, when you type in the symbol, it'll tell you earnings date. It's coming up, and it's in green to warn you. Oh, we're getting close. So earnings season will start on April 8th. Now, we don't own the symbol AA, but we do potentially have the symbol FAF. So let's check that, for instance. If we're going to buy it, when is earnings? Okay, it's at the end of the month. All right, so what I'll do as we get into Monday, I'll adjust our stop prices, and then I'm going to put all of the earning dates that are available, which I think they probably all are by now. I'll plug them in. All right, and so then just it's just a heads up. Some stocks can really shock on earnings and gap up or down pretty big. Now, for the most part, the symbols that we play are stocks that have had a consistent record of at least making some money. They eat quarter in and quarter out. They're saying, yes, we met or exceeded our Wall Street estimates. Because what happens is all the analysts on Wall Street get together and say, okay, Target, we've done our research, and we think that Target should make about this much, however hundreds of millions of dollars it is. And then they divide it by the number of shares outstanding. And they'll say, okay, well, we think that Target should make $1.50 per share. And then when Target comes out on whatever day their earnings are, they'll say, we made $1.51 per share. Well, that means they beat the estimate by a penny, and usually it's all exciting, and and Target will gap up or run up, all excited, and that's it. Most of these companies here, if you were to do a little research, they already have a history of meeting or exceeding earnings. So that's given us a little protection so that, if one of these companies says, well, I know you thought we were going to make $1.50, turns out we made $1.48, it's not such a big deal. They say, well, okay, we'll let you slide a little bit this time. The stock will still sell off, but it won't be some huge 10% gap down and you wake up, in a panic because you're just like, holy cow, I just lost all that money. So with the exception of Target, Most of these are good stocks that are making money. And probably Saks too. Not sure how Saks is doing right now. But FAF, they make money. GIL, ILCR, WY, they're all doing okay. All right. So I will put those on there as well. And I think if I remember, see like the retail stocks, they're usually towards the end. Target. So that's not till late May. Yeah, see, they're all in May. So we've got some time on those. What do we have? Microchip is probably towards the front somewhere. April 29th. So the tech companies are a little bit earlier. But I'll put them all on there for you, so just in case you want to know. And we'll have that all set. And I think I've pretty much covered it. Yeah. I think we're good. What was I gonna do? I was gonna remind no, we're good. We're all set. So for if you want to see any of these charts or the portfolio, it's on the members page posted there. This video will be posted there too as well for those that want to watch it later. And I think we're all covered. So if there are no questions, I will wrap it up. I thought you were coming by, Steve. You like, I cleaned up. See, I vacuumed and everything. I'm just kidding. I didn't vacuum. I would vacuum, though. No problem. No problem. All right, I'm going to take the screen down. And like I said, hopefully I can get that, start that letter. That's my goal by like next Tuesday. If I can start sending that out, you know. So I know there's a lot of people that can't make these classes, and that's okay. We still want to help them out too. All right, guys, enjoy the rest of your day or evening, depending on where you're coming to us from. And we'll talk soon. Good night.